Good morning, everyone. Thank you for joining us. I will give it a few seconds while everyone jumps in, but I can see the number going up, which is fabulous. There we go. We're still going. Let me make sure chat is open for everyone. Perfect. Amazing. Right. Still a few people coming in, but let's get going. So, welcome to this morning's session between us and Zama, all around getting things right first time and why strong AML processes are key to growing your firm. My name is Katie Graham. I'm the head of partnerships and growth here at Telaroo, and I will hand over to Marcus to introduce himself.
Good morning, everyone. My name's Marcus, and I look after customer success here at Zama. So all that means is just making sure you get as much as you need from the platform. So those that don't use Zama, Zama is an AML solution for UK accounting firms. So it's really to take all those components of AML, so everything from your client due diligence to risk assessments to the AML training and everything in between, into one place to help you manage your ongoing responsibilities.
Amazing. Thank you very much. So a little bit of housekeeping before we get in. So Q&A box, please do pop any questions in there. We will have time at the end to go through them. No such thing as a silly question. Ask away. There will also be a couple of polls throughout. So again, please do answer those. It will just help to guide the conversation and help us get as much out of this as possible. But let's jump straight in. So let me launch first poll, but while I get this out, which is just a question around how confident you are around your current client records, let me launch that. There we go. But while I do that, Marcus, why don't you give us a little bit of insight just as to where this question came from and what we're really trying to understand here?
Yeah, sure. So, I mean, nobody expects your client records to be 100% perfect. There is really kind of a bit of a the live clients, things change all the time. But it's really about sometimes during the kind of the onboarding process, we can often cut a few corners or just to reduce friction on the client side. But often this can then lead on to future barriers that you've maybe unintentionally put in place in order to kind of get that client on board and sort of remove that friction. So whether it is asking them for a bit less information up front and capturing it a little bit later, which might not ever quite materialize, or whether it's cutting corners in terms of the AML sort of things along that way. So it's really kind of about how confident are you that you're capturing all the information that you think is relevant at the start of that relationship, which often then sets the tone for things like AML, but also other bits we'll cover today as well.
Yeah, absolutely. Amazing. So let's jump in. So, I think one of the big things that we have had come in recently is the introduction of identity verification at Companies House. I think there's been lots of discussion in lots of different forums on LinkedIn, on Facebook, everywhere, and it's definitely caught a few people off guard. But I guess, Marcus, you guys work with thousands of firms, so
Yeah.
it'd be really interesting just to hear from your side the impact that this has had so far and where you're seeing firms at the moment.
Yeah, sure. So for those that maybe not been involved, but last November, it becomes sort of mandatory for directors and PSCs to be verified at Companies House. And we had a bit of a window before that, sort of get ready for that sort of thing. But I don't think any window is sort of big enough to get everyone prepared for that change. But what we were finding when people reached that period where it was a requirement is that a lot of firms didn't tend to have enough information to hand already, or at least to a certain standard, to actually meet the Companies House guidance directly. So what often happened is that a lot of firms had to spend quite a lot of money and quite a lot of resource having to re-verify their clients, or try and send them all directly, which is probably the easiest route. But a lot of the clients who maybe couldn't go direct or needed a little bit of extra support had to then all be re-verified, which was a huge amount of cost and time and resource to do that. But there were also a portion of firms that we worked with as well that didn't have that problem at all. And the key difference really was that they felt it was a useful process to align the two right from the outset. So having a single process for onboarding when it comes to ID verification, not just to satisfy the AML side, but to also make sure it meets that Companies House standard. So they didn't necessarily start planning up as soon as it was announced, probably like a couple of months before it become a mandatory thing. But having that process moving forward just made everything a lot easier during that process. So the client didn't have to go direct to Companies House. The client didn't have to go by the post office if they couldn't go direct. And there's also that risk of if you don't do it as a business, they might also go to a different ACSP. So there's various benefits of aligning the two.
Definitely. And I think, like you say, I think there were a lot of people that looked at it. and didn't quite know how to approach it. And I've definitely seen some conversation of firms going, no, we're not doing that at all. And I think that point you raised at the end there around if you're not, someone else might be, is actually a really interesting one. And
Yeah.
something that I don't think all firms have considered is that this, whilst they're looking at it as being risky to do in the first place, there is also a big risk around not doing it.
Yeah, exactly that. I mean, the risk, I don't think there's probably been some conversations on this. It feels riskier than
Mm.
doing it a standard AML, but arguably the process is the same. And if anything, the company's house guidance makes it. I'll say the process is the same. The process can absolutely be the same. I think it's really down to how you interpret the guidance, but you can absolutely align the two and make it a little bit easier. Yeah, just to remove those barriers because there isn't really a huge amount of difference in risk. If anything, the AML feels a bit more riskier because if you're happy to be a bit more lax on the AML side. Whatever they post at company's house is almost the same thing. So
Yeah. Okay, nice. So I guess this leads to the kind of bigger conversation around AML as a whole, right? Which is that I know when we speak to firms, when we're collecting bits for onboarding, there is still a bit of a feeling that collecting this information, going through these checks is a little bit of a tick box exercise, and that a lot of firms don't necessarily have this linked into other processes and therefore don't see any additional value in the capture of this information or what that might do for people.
mm.
But I know that you obviously see that quite differently. It would be really good just to understand a little bit more about how you see this like initial capture of information and understanding of a business feeding into wider conversation with them.
Yeah, I think a lot of firms sort of do this, but in various different ways, and it tends to be quite unstructured. So you're probably asking a lot of these questions, or at least aware of these things. So like what sector the client's in, who do they trade with, what sort of suppliers they have, where are those people based, how do they kind of find you? They all tend to have benefit from an AML side of things, and you're probably collecting that anyway because they also have a commercial value to a lot of those conversations too. But often those things aren't written down. They often those things aren't in conjunction with other kind of risk factors. And I almost want to create a new name for risk assessments because I don't think it really captures the actual benefit of that document. Yes, you're assessing risk, but it's probably one of the only places where you're assessing all those different data points away from the noise of the ledger and away from the noise of the maybe like the CRM. We're doing a lot of communication with clients and comparing all those things together, not just to kind of go, are they high risk or not, but more about where the gaps might be from a internal control perspective or services that you might offer to that client. Or if all your clients are being referred to you by existing clients, why are we spending 3 grand a month on marketing? Because maybe that isn't really giving us the return that we had hoped for. So there's lots of benefits to that, and we've tried to keep our on the Zama system, keep the risk assessments really flexible, so you can still cover what you need to from an AML side, but also build in some other additional questions, some custom fields to kind of use that system as a bit more than just like a box ticking exercise.
Got you. And I think on that point, I think again, like you say, risk assessment, people are kind of going through and just filling in that information, and the maybe the wording of it is wrong in the first place. With that, and when we think about how you bring this into a process, what is, in your opinion, the best way of making it feel less detached as a process so it doesn't feel like, hey, this is completely separate, I've got to go and fill in this form?
Mm. I think, yeah, it's a good point. I think sometimes it does seem quite it does feel like it's quite separate from everything else. I think we don't want to. The guidance allows for, or at least depending on how you interpret it, it allows for risk assessment to be done periodically, however you kind of want to interpret that word. So some firms do the bulk of the client base, which is probably a separate topic, but should be normal risk for the most part, and often do those on a 1 to 3 year sort of interval. I tend to encourage to do it on an annual basis, and that's not because you need to do more AML, and I think you should be more compliant that way because you won't necessarily be more compliant, but it's more of a practical way of building it into your existing processes. So there's a lot of benefit of aligning it to every time we do a year end, we update the client risk assessment. Every time we do an SA 100, we also update that client's risk assessment, mainly because all the information at that point is really up to date. So all the information that you're documenting in that or reviewing is probably as up to date as it's going to be throughout the course of the year. You're already in conversation with the client. So if there's something missing from an AML side, it's a lot shorter in terms of the back and forth of chasing them. But also, if you want to have the conversations about new services or whatever it might be, you're probably proposing or re-updating the engagement letter or that sort of thing at that or repricing at that point anyway. So it just feels like an opportune time to do that. And it's probably one of the only times you've got leverage in the year to, if the client doesn't play ball and send you the ID or the proof of address that you need at that point, you can almost say that I can't complete this piece of work until that's done. So there's various benefits of it, and it just feels a lot more practical on that because I think that there's a lot of worry, I think, and fear of in the back of your mind, you can sort of think, oh, as risk assessments are building up, it's been a couple of years since I reviewed it. But
Yeah.
if you slowly chip away at throughout the course of the year, attaching it to client work has to be done. So you at least then you got peace of mind, sort of looking back over 12 months to go, as long as the client work's done, everything else also is being done all at the same time. So yeah, so lots of benefits to that. But you say you got a lot of flexibility, but that's what I tend to encourage.
I guess two things I want to pick up on there.
Mm.
One, I know is definitely a bit of a controversial point, but I think it'd be good to get your view on this, is the piece around risk grading there. You mentioned normal risk, and I think there is a lot of people that default to low risk, where that potentially isn't appropriate. So it'd be good to understand a little bit more about maybe what the guidance says about that and where the appropriate use of those risk ratings sits.
Yeah, I think one of the confusing bits sometimes is the use of the terms. Like, so some bodies will use the term like medium risk. We tend to go for normal risk, and there's various different versions of that. It's really about the story. Part of it is just to be able to tell the story, to go, we've got a specific criteria that we believe to be our normal client base. It's where we typically trade. So maybe we're a UK based firm. All of our clients are UK based. If any of you have completed a firm wide risk assessment recently, it's basically that structure. So jurisdictions, type of client, sectors, services, what does normal look like for us? And that makes it a lot easier internally if you then to go, okay, there's something different about this client that might actually add a bit more risk and then push them into that higher risk category. What I do see quite often though is people, and it's come out in a few different ways in different like AML sort of reviews and reports and stuff, but is the overuse of the low risk category. And that's not to say where you've applied it is necessarily wrong, but low risk is tend to be a bit of a definition around that. At least if you kind of look at parts of the guidance around low risk tends to be those businesses that have a bit of an unorthodox level of transparency. So whether it's a PLC or it's an FCA regulated business, they're publishing a lot of that content in a public domain, like their full P&L or all that sort of stuff. So there's an extra layers of controls or mitigations in place, which is why they tend to be lower risk. But I tend to say if the bulk of our clients typically should be within the normal risk range. Firms tend to use the low risk partly because the client isn't dodgy, so they kind of feel low risk, so that's fine. I've known them for ages, or whatever the justification might be, but often it's used to simplify the level of due diligence that's required. So when a client is low risk, you can arguably do simplified due diligence, which is useful because it feels like it's less work because you feel like you're doing, you might just collect a photo ID or maybe not verify it in the same way you do other documents. However, in order for you to kind of get to the outcome where you go, that client is low risk, you almost have to go through a proper due diligence process anyway. So you might find in time clients sort of evolve into low risk, but I think as a starting point, the majority of clients typically would sit in normal or high.
Okay, that makes sense. And then the second point you were talking about there was around potentially bringing those in and reviewing them annually, right? And I
Mm,
know that my initial response to that, if it's something I was doing less frequently than that, like you said, is going to be that feels like more work.
mm.
And I think that's part of that mindset thing of I've got to go through this. It's a bit of a tick box exercise. But I guess from a practical standpoint, what can they do to make that feel like less of a I'm just going through answering the same questions that I did last time and almost becoming slightly lazy with it and just going through and ticking whatever you ticked last time?
I think part of it is making sure that those templates or whichever kind of document that you use. If you use Zama, you may have seen the risk assessment templates. If you're using like a professional body template, you may have those. But it's making sure that one, they're adapted in a way that makes sense and aligns with your firm compliance. I see quite a lot where you've got maybe from ICAW or ACCA, you've downloaded their template, and there's a list of every service you could potentially offer in an accountancy firm, but you might only ever offer one of six services. It's a very simple part, but just shorten that list so you're only picking from the right services so it doesn't feel like you're putting not applicable for half the questions on that sheet. Because I think that's when it becomes something that just feels meaningless and repetitive rather than being something that's a useful and like a quick review. The other bits as well is making sure it's clear. You almost treat it as a bit of a process document at the same time. So one, to reduce internal questions, but to also use it as a this is why we asked this question, this is the benefit of the answer. And we do it by way of help text in the risk assessments, but you can do it in various ways. But just so it kind of walks them through that and they can see the benefit of completing these questions. Um, The other thing as well is that sometimes doing it in like a PDF document or whichever template you might use outside of something like Xamarin or whichever other solution you might use, it's quite hard to report on that data. So even if you were doing it in those forms, you might find it's actually quite hard for me to pull out that data in a way that's useful. So doing it in something like a spreadsheet or something like Xamarin, you can often pull that data out and start to report on it. So just as a bit of a side note on what things we're bringing in soon, you'll be able to basically report on certain questions that are asked during a risk assessment. So find me all clients that were referred to me by existing clients, or find me all the clients that are cash based, for example, and pull data out that way, which then becomes a lot more useful. So I think it tends to be down to how the information is structured, how easy is it to complete, how tailored is it to our firm, so it all kind of makes sense and it's contextual, and then how do I use that as a value in the business by way of reporting against that information.
Nice. Okay, I like that. That makes complete sense. So I think, yeah, overall, from that, it is very much if we can get that into one place, then like you say, actually it's not just one thing that you're going to impact on that. You're going to have, yes, what you need to kind of tick box the compliance element, but also there is that commercial element and also making sure that risk ratings are kind of appropriate and set where they should be. So
Mm.
that makes complete sense. And I guess we've touched on this, right? But actually, this all starts to add up as you kind of look through those early stages of the customer journey. I'm going to hand over to you to kind of walk through this because I think this is really powerful in terms of understanding just quite the benefit of this.
Yeah, sure. So it's sort of tying the company's house stuff in a little bit. I don't want that to be the only kind of reason for this, but the if we can kind of rather than just looking at what do I need to do to get the client from not being a client to starting a piece of work, but also looking at what do I need to do to kind of remove the barriers moving forward. So the more topical one is of course the company's house stuff. So whilst it feels like we're coming to the end of that kind of like cleanup project or the kind of backfilling of that, um, moving forward, any of your like unincorporated clients or if they go on to form a company, they're going to have to be verified as part of that, whether using information that you've currently got or having to go off directly or via the post office. So I think if we can get that onboarding state process where it aligns with the two, it just removes that extra little bit of friction later down the line. And so there's almost nothing for that client to do as part of that. So you've already got that on file. You can go to company's house, tell them about that, and then get the personal code sent to them. So there's that part of it too. But there's also a lot of things, we'll touch on it a bit deeper in a minute on the Teleroo side, is that that information is also useful for other purposes too. So when you're looking at, there's probably a few different ways you can look at this, but if you look at it from an opportunity perspective, okay, we want to bring in payments to the business. And one of the ways we're going to do that is by introducing Teleroo. We've got a lot of clients we do payroll and a lot of clients that have a lot of time spent on making supplier payments. So we're going to introduce something like bulk payments to help with that. That's useful, but the client has to go through a compliance process there. And that can absolutely be reduced by the information you've also collected during onboarding, which we'll touch on shortly, but which can also be ported through to Teleroo. Doesn't remove the compliance process entirely, but it does reduce the effort from the client's part to have to collect bits from the other directors and only just sort of leave the finalizing of that to happen. So you can almost set yourself up to remove those barriers. So the client just feels like everything's being taken care of, and all you've done is just lift the standard a little bit at the front end, and it's removed a lot of that barrier moving forward. So there's lots of benefits to that outside of that, and that's kind of one of our sort of long-term aims is to kind of how we can almost have like a bit of a repository of all really useful data that can then feed into other solutions like Teleroo, for example.
Definitely. And I think, I mean, you'll know this as well, just from speaking to firms, it's something that comes up all the time is that you will have lots of firms that are not necessarily happy with some of their current software choices. But one of the biggest barriers to changing that is impact on client and what the client's going to have to do to change and are they going to
Yeah.
be happy about it. And we've just had to go through a setup process with this other software and they're really not going to like if we have to do that again. And I think that almost ends up being a barrier to the firm's own growth and progression because they are having to constantly firefight and think about that client facing piece. And so, like you say, the more they are able to handle internally by having all the right data and information to smooth out those processes, I think it makes, yes, the client experience better, but also just their own internal ability to flex and try new things and move from places that they may not be happy.
Yeah, absolutely. I think just a side note on that. I think one thing I see in not necessarily large firms, but those who've got a bit of a team around them, is the kind of learning of the juniors, or sort of what opportunities there are, and maybe what other things they can sort of surface that might generate either commercial advantage or just a better service for the client. And I think sometimes that is you almost sort of go, why aren't they picking this stuff up? Like I know all this stuff, and part of that is because a lot of that's in your head, and I think that's a good thing because you've built up a lot of experience in what you're doing, and you can retain things that well. Juniors typically can't, or at least can't connect the dots. And I think these risk assessments, or whichever new name that I try and find to call them, which sounds better than that, is a nice way to capture that information that other team members can then share or talk about or discuss to then see what other things we can start to generate in the business, whether it is a better process internally or whether it is an opportunity for a client. There is a lot of value in this stuff if it's done right, and there shouldn't be too much of a change in process to make that happen.
That's an interesting point, particularly on people that have teams around them. One thing that we find quite a lot is that when I'm speaking to firms, a lot of the AML and the risk assessment kind of information and processing is sat with very few people within the team and often quite senior members of the team,
Mm.
which whilst from a risk perspective, I think that's an approach they've taken for a reason. But actually sometimes those people aren't the closest to the client and the kind of capture of that information. How are you seeing firms kind of tackle that as a challenge so that it's not so bottlenecked?
It's a good question. I think part of it is being able to delegate that, but I think one of the things that's blocked people from delegating a lot of the AML stuff, which then turns into what we're talking about here, is one, lack of visibility. So I think if it's all being done in PDFs and all being stored in client folders in OneDrive or wherever they're being stored, it's quite hard then to go and have a view across the business. So you then have a sort of bit of uncertainty over what's been done and what hasn't. So then that sole practitioner or partner or whoever ends up holding on to a lot of that work. The other thing as well is that being able to, when you are delegating it out, knowing what, at least from an AML perspective, what does high risk look like and what does that mean? Sometimes there's a bit of uncertainty around if the training's done sort of once a year for the team. You're not probably not always confident all year round that everyone quite understands that risk level and what that actually means to the business without having to go into the firm-wide risk assessment, giving it a review, asking some questions in that way. So partly it's how we structure those risk assessments so it makes sense and it almost leads them to that answer, but also how we then support them with a bit more regular sort of light touch training throughout the course of the year, just to keep these things front of mind. And the other part is process. So I think is almost making it part of the checklist that you use during bookkeeping to flag odd looking transactions, or if we spot something like a cash deposit over X amount of money, that's something we then flag as a double check or get a second pair of eyes to review it. So those tiny little tweaks to your existing processes that I'm sure are there, either in your head or in process documents, are making small little tweaks as to how, one, we can use this as a little trigger to see if whether AML needs to be updated, but also could this mean we can have another really useful conversation with the client that isn't just like maybe like a compliance led conversation.
Yeah, that makes sense. I think it's one of the things I really like about Sama is the kind of rules in the risk assessment, right? That you can almost set those boundaries so that other people can take on some of that work, but you don't lose kind of control of what is or isn't acceptable for you as a firm.
Yeah, yeah, exactly.
Amazing. I did see a hand go up a minute ago, so just a reminder that Q&A box is open. Please do put questions in there, and we'll absolutely come to them.
Yeah, got
But
one in there from Zoe already, which is good.
amazing. So Teleru and Zama, the connection that lives there. For those of you that don't use Teleru at the moment, we are a payments platform for accountants and bookkeepers to support their clients with payroll and supplier payments. Now, the whole idea here is that if we look at kind of life cycle of a business, payments are typically made from conception. They're sat around a kitchen table and they pay a website designer to build them a website right the way through to exit. And then we layer over the top of that various kind of accounting and bookkeeping services. And there are often trigger points for things, right? So actually, we're onboarding a client, we start talking about AML. As they start to grow and they hire people, we're talking to them about bringing in payroll solutions and HR support. As they get bigger, maybe cash flow is an issue, we talk to them about external funding. They grow, we start talking to them about corporate finance and exits and all of these things. And yet, payments are often the thing that have been left behind. And we see some beautiful bookkeeping work happening, and we're handing back to directors to log into various online banking systems and fiddle around and try and get those payments out the door. And then what actually happens is it all comes back to you guys when you realize they've paid based off of statement, not invoice, and you're playing a game of matching, or they've paid payroll and mixed up numbers and you're having to correct calculations the following month. And so the whole point here is that in introducing a payments platform, you can smooth out that process for client, but also actually for yourselves in terms of making sure that the data that's going in and out is accurate. So, one of the things that we have to do as part of the process of getting clients set up with Teleroo is onboard them. And to do that, we have to capture lots of information about the business, around the payments that they're going to be sending, and then also around directors and shareholders. And one of the things that we always need is ID for shareholders. And it's often a point where we then end up going back and forth and things are uploaded in and we're having to capture all of that. And so we are very conscious that for lots of people, they are already using Xama and they have that information from great processes up front. And so for us, this became about how do we streamline that process for you even further so that instead of you having to go into a platform, download that information, upload it somewhere else, actually, how do we just get it straight from one to the other? And so on screen, what you're seeing here is exactly what that share now looks like. So within Xama, you are able to go to your settings and connect up to Teleroo. And once you've done that, within a client, you can copy a code directly out of Xama, paste that into the Teleroo onboarding flow, and that allows our team to access the ID that you have for that client automatically. From a process perspective, just to be super clear, the Teleroo invite flow at the end will get you to add a director's details if we're talking about a charity or a sole trader or a partnership, whoever the relevant contact is, and that person will receive an invite saying that you have invited them to use Teleroo. Now, that person that receives the invite will still have to upload their ID, and that is because we need to verify that they are who they say they are and that they have the authority to authorize us opening their Teleroo account. But what this does do is means that for any other shareholders that we need to identify, if you already hold the ID, that will be shared and we won't need that. And so what it should do is two things. One, it should cut down the amount of time that you spend kind of going back and forth with our onboarding team, needing to download information and re-upload it to Teleroo. But secondly, it should mean that as long as that process is nice and slick, then actually you won't need to contact the client for additional information. Any questions on that at all, please do pop them in the Q&A box, but it is ideally nice and simple. It really is just sharing that information from one place to the other to make it as slick as possible. Amazing. So, quick question here for people just out of interest as to whether you are currently offering payment support for clients. Let's get this up. There we go. So, do you currently offer payment services to clients? Your options are yes, we use Teleroo, yes, we use another platform, or we do it manually. No, but we would like to, and no, we don't want to. If you don't want to and you're happy to share, it would be really great to see in the chat why it is that you're not wanting to offer payments because it's normally one of a few things, right? It's typically risk, time, or actually you don't think it's something your clients would want and it's not a conversation that you've approached. So would be interested to hear any feedback on that as well. But Marcus, while people are voting on that, what I think is really interesting here is around where the conversation goes when we talk about introducing payments and potentially the impact on risk of the client.
Mhm.
What do you think is the kind of insight there?
Probably a couple of things. Yeah, a couple of things come to mind. I think one of them is often I think one thing I've over time learned about the payment side, or at least the benefit of it, is from the own internal sort of like money management and the reporting that you might be doing. So if you're doing other reporting outside of just the year end, like you do in management accounts or whatever that might be throughout the course of the year, if you're managing all that part, maybe using the bookkeeping but not taking on the payment side, it can often create a little bit of a difference in between your reporting versus the reality. If the client's maybe doing payments in a slightly unorthodox way, part paying or paying at different times of the month. So I think if you can control that part, you often find the financial data is a bit more reliable when you are doing that reporting. But from like a risk perspective, I think one thing, and it's definitely not going to be a silver bullet, and I don't think anything is by itself is going to solve AML or kind of mitigate everything. But when you're looking at different services and which ones are deemed to be slightly higher risk than others, payroll absolutely falls under that bracket, alongside bookkeeping and like TCSP services. Because payroll in various ways can be abused to avoid paying tax or just basically extract money out of the business into like phantom employees. There's also things like modern day slavery and bits that come as a part of that. But one of the useful things in tools like Xama is that tools like Teleroo is that you've also got the confirmation of payee checks. So whilst you do get visibility over the payments, you get the control, you get the commercial advantage of running that new service line for your firm. You also have another little layer of security to know exactly where those funds are going, because, or at least the name matching on the bank versus where you thought the funds were going. And that's useful to help mitigate a little bit of that risk around running payroll, where you sometimes you don't quite know where those funds are being sent outside of them just telling you it's for an employee. So that's something worth bearing in mind, is that we can then know that if that individual set up 10, 20 different accounts to extract 12,570 or whatever it is out of there to avoid paying income tax, you can very easily hopefully be able to spot those with those confirmation of pay checks. So there's a number of different benefits to it, but that's from a risk side what I tend to mention on calls.
Definitely. I think it's a really interesting one, right? And I think often when we speak to firms about offering payments and introducing it, they are wary of risk. That's always been a thing. And I think that's because traditionally it did mean accessing clients' bank accounts and going down that route, which meant you needed card readers and codes and all of these things that made that quite tricky. And it often restricted who could support that process. And it often ended up being partners, directors, senior members of the team that were then being involved in what is kind of quite heavily admin activity, right? And so I think rightly so for the solutions at the time, people stayed away from it. Or your alternative was setting up client accounts, having clients paying funds in there, and then dispersing that way, which again, quite admin heavy. There is reporting that is expected of that, depending on who your kind of governing body is, etc. So not ideal either. And I think that conversation that's really interesting for me is that actually now with tools like Teleroo or other tools that do similar things, there is the ability to get involved in these processes in a way that is really efficient, but that actually, like you say, has the opposite effect. It's no longer increasing risk, it actually has the ability to mitigate that for them with all of the kind of various checks that live in there. Amazing. So thank you to everyone that answered that. What is really interesting is 35% of people on the call don't offer payments currently, but don't want to either. So would be interested to dive more into that. And there is a little bit of sharing in the chat around what that is. But really good to see that overall 50 odd percent are doing it, whether that's with us or another platform or doing it manually. So really nice that people are stepping up and filling that gap for small business owners. Perfect. Before we get to questions, Mark is going to pass over to you here for a little bit of a takeaway checklist for everyone on the call of things that they can go away and do straight after this that will help.
Cool, no worries. Yeah, so I think part of it is maybe just adding a little bit to the top of that is your policies and procedures really is going to be what does my process look like. So I think just above where we've got this on here is that's going to set the tone for everything else. You could probably use that to review your onboarding process as to one, does that align? And then from that, is that what we expect every client to look like in terms of what information that I collect and what we document for each of those? And then from that, what could I ask at this point that would make my life a little bit easier later down the line? It's absolutely a balance between you collecting what you need versus not creating too much friction at that point of onboarding before that you've kind of kicked off the relationship. But there's absolutely a lot more we could probably get into that. Whether it is internal documenting of it, of calls that you've had, whether it is using sort of note takers in calls to kind of capture that through discovery calls, or just having it as part of the requests that are sent out via Zama or elsewhere. Um, in terms of the second point, so checking the records for completeness, using that framework that you've got in the policies to go, this is what good looks like for different risk levels. Just making sure, do a little dip test. And I think that's probably a good practice generally anyway, is to have a little bit of a dip test of client files, almost mimicking what they're going to be doing within a professional body review. And then taking a handful of maybe a couple of high risks or other risk levels and just making sure they match. I would probably say go to your longest standing clients and pick a few of those, and then some of the new ones, and then compare the two and see how things might have evolved over time. Um, Identifying clients without a current risk rating, part of that is just making sure that you've got that consistent process where you might have had a little bit of gap in that information, or it's been a little while since you've updated that record. It's been sort of 3, 4, 5 years. Are you confident that risk level still applies? And that's something worth reviewing on. The company's house INDV part, I think nobody's saying that you absolutely should do that. I think there's a little bit of confusion around the role of the ACSP because that will kick in. I think it's been moved back to November now. I think it's meant to be April, but now it's been pushed back. It's the ACSP is a required status to have to be able to file on behalf of a client. It just so happens to also have the role where you can verify people too. But I think it's worth looking at that as a whether introducing that in my firm is going to remove the barriers of clients that do go on to incorporate based on my client base. And I think if you are quite comfortable with that, if you want another conversation aside from this to kind of run through a couple of scenarios, more than happy to. But I think there's probably worth a little refresh as to whether that's worth, in certain cases, you being able to do in-house. And then what do you need to kind of close those gaps, whether it is a tool like Zama or otherwise, or a little bit of training on the ID verification side. And the last bit on the Teleroo bit is if you do use both systems, it's a really useful way that the next time you have the conversation with the client and they're happy to move ahead or at least explore the route of using a bulk payment provider, give that integration a try and let us know what you think on those because that feedback's really useful for us to see one from the client side how much less effort they felt it was on their part, but also from your side as to how slick that integration is too. So the team have put quite a lot of work in one to make it feel like a slick process, but also make sure that information is super secure as it transits from one system to the other.
Amazing. I'm going to stop sharing that. But one question before we get into Q&A from audience. You mentioned right at the start there that actually to do any of these things, the first thing is policies and procedures and making sure that they stack up.
Yeah.
I think for a lot of firms, they have taken almost a kind of copy and paste of a pretty basic set and run with that. For someone that's going to go back and review that and think, how do we actually make this accurate for us as a firm? Where do you start with that? Because I imagine that can feel quite overwhelming.
Yeah, there's lots of different templates out there for those. It kind of gives you a good starting point. I think to do one from scratch probably isn't really necessary. There's lots of different ones. We've got some free templates in the platform that you're welcome to use. But I think the key parts, and the reason I'm looking this way is just because I did a session on this earlier today, but the policies and procedures should really consist of things like what do we collect from clients for different risk levels, either onboarding, and what do we make sure that we maintain ongoing? What does the data retention look like? So you've got that 5 years post disengagement. How do we make sure that we handle that data and offboard the clients appropriately and then delete it properly after that period's ended? The internal controls, so not just when we do risk assessments, but in between those periodic reviews, what are the triggers? So whether it is something like a change of ownership or every time we do a new proposal where there's a new service offered, does that change the risk? So it's almost tacking into those little mini processes that you've got throughout the business, whether they're written down or not, but using that as a trigger point to say whether or not it's useful to update that. The client sort of KYC, but also the risk assessment side. And I think also that another useful part that is a requirement is also to make sure the team understand that. So I'll definitely circulate, even if you updated it recently and the team has seen it, but circulate that policies and procedures around the firm. One, to make sure that they read it and they understand it, but to also get their feedback on what doesn't look quite right or where there might be gaps. Because to do it all by yourself is fine, but you might have a little bit of a blinker on as to other bits that might be worthwhile included. And getting that team involvement to build those out doesn't just help with um, making it effective, but also gets them bought into that process at the same time. So yeah, it should be a bit of a collaborative exercise, really.
Amazing. I'm conscious earlier when I tried to launch a poll, it actually didn't launch, so I'm going to pop that up while we start Q&As. It's really just around that confidence in client records, so please do pop an answer in there. But let's jump into questions. The first one is for you, which is, are there any plans for Zama to ask for mobile phone numbers? They are needed when onboarding clients to Teleroo, and it's the one thing that they don't have on your end at the moment.
Great question. So we do absolutely do. So we are introducing forms. The exact timeline I'm not totally sure, but in the next couple of months is the plan to get those out. So we just introduced custom fields, which will be the home for a lot of that data. So now that's out of the way, and that custom fields went live last night. So you should see that in the platform for anyone that's using Core, I believe it comes with. But yeah, it'll be collected that way, so we'll be able to introduce it as a form as part of the request to the client. So yeah, that along with other information you might want to collect during that process too, will be added in.
Amazing. Good one here from Chris. He said that we mentioned confirmation of payee checks, but actually that doesn't completely mitigate the risk of sending payments to fraudsters. And you're completely right. It doesn't. And I think the thing with this is there's never going to be a single silver bullet, so to speak, that's going to solve this. Confirmation of payee is one of those things. Yes, having those name checks in is great, but actually we are also conscious of that. And that's why we have a number of other things in platform. I might just share my screen actually, and I can show you a few things that just talk around this. And these are the kind of things that I would advocate that firms are looking at and building process around. So obviously, first things first is when we are picking up invoices or payroll, there is an onboarding piece that needs to happen before that. What is your new supplier process? How is that information captured? How do we verify information initially? And same for onboarding of new starters. What are we doing to capture that information and make sure that's correct? We then have things like Approval Max and other approval tools for invoice approval to again add in these stages as we walk through this process. But once you get to point of payment, confirmation of payee is yes, one thing, and that's what you're seeing down here on screen. We've got bank details, and that flag is saying updated, which indicates the bank details have been changed since you last paid them in Teleroo. So that's one flag where we're saying, hey, last time you paid these people, you had different bank details or a different name against them. Someone's changed these. And then the second thing next to it is partial match, and that's that confirmation of payee check that's saying this name doesn't fully match these bank details. Now, you would also see full match or a no match, right? So that's flagging certain things. What you're then seeing underneath the payee here, and this is just an example, I assure you Teleroo is not a high risk payee, but under that you're seeing high risk and it's clickable. And if I click into that, we do some checks to try and verify this payee. So we're saying, hey, we have some concerns, and if you click see report details, we're checking a number of things here. So the first is confirmation of payee. We're saying, okay, name partially matches bank details. That's not a major flag. Company is more than 2 years old, so this isn't a new business that someone's set up to kind of spoof you. Sender email origin. The email address provided against this is generic. It's flagging as being fraudulent, or something's been set up wrong here. So we're going, actually, we're not convinced that where you got this invoice from is legitimate. And from a domain age perspective, it's failed that check. Actually, we couldn't verify that information. That could be a problem. And so, again, on its own, confirmation of payee is one part of that, but actually, it's everything else that sits around it. It's us tracking the details you used last time and flagging those things. It's that report there that flags all those different details. It's the hundreds of transaction monitoring rules that we have sat in the background looking for strange behaviors that don't feel in line with what we'd expect for this client, or that are comparing information to say, hey, actually, the last time someone paid these bank details, they later flagged it was a fraudulent payment. So we've blacklisted that in our system and we don't think that's somewhere you should be sending funds to. It's all of the other things that sit around it, of which, yeah, confirmation of pay is just one part of that, Chris. You're completely right. It doesn't completely mitigate it. But what I would say is that it's one tool within a bank that helps to build out the robustness of this process and give you, but also your clients, the confidence around this, right? Marcus and I both are ex-NatWest and have sat and had calls with clients who have paid thousands of pounds away to fraudsters and been left in some really, really tricky situations. And so, whilst nothing is bulletproof, the more you can bring in around this, the more support that you can give them, the better.
Nice one. We got on that topic of payments. We've got one from Sarah Solo from Paper Rocket fame. One about MSC legislation. So that's one that you can tackle now or
Um,
offline. It's
that's
managed service
a
company stuff.
Yeah, so it's an interesting one, right? Yes, the legislation is obviously there and it's looking at those that are using the intermediaries in between to avoid tax, etc. That is always going to be a risk. And I think the reality is that risk exists whether you're involved in payments or not. And the thing with this, I was having a conversation with a firm about this not long ago. The thing with this is, as I say, risk exists either way. It's more how involved you want to be and how you can then mitigate that risk. And I think all the things I was just saying help to go through that and bring that down. The other thing with it is for those that are using things like umbrella companies, there are now tools, etc., that sit within that can verify the information. They do live checking of the HMRC data and make sure that things are being paid as they should. So I think from my perspective, there is risk around everything. It's really just how we mitigate that and how we build processes out around it. And again, I think one that happy to take offline and walk through what process looks like and how we do various verifications to try and mitigate that.
Nice one.
Main thing, and one
We
more
got one
thing.
less from Swetha. We got one which is I just got started on Zama, wanting to know how often I should be performing AML checks. Can it be done annually for all the clients? It can be done annually for all clients, but there's no reason why you should necessarily be running those annually for everyone as a sort of a blanket approach. Obviously, for us, that's how one of the ways that we make money. So obviously, I would love you to run us checks as much as possible, but there's absolutely no reason to do that as a broad thing across the client base. The best thing to kind of think of that is to probably basing it on risk levels, but also having a bit of a criteria within your policies and procedures as to when it is appropriate to rerun those. The main reason is that it's a combination of a couple of things. It's going to be your political exposure and sanction screening element of that, but also the identity database checks as part of that AML check too. If there's not been any change in where the client lives, it's probably not going to give you much further insight on that. It's absolutely not a real-time view of where the client's living at this moment in time. There isn't really a source for that. So they'll need to be there for a little while to build up the history or the electoral register voting roll logs and bits as well. But you may find the PEP and sanctions part of that useful to run periodically. But there's nothing in there that says you have to run it on an annual basis. So running it every 2 years is absolutely fine. But the best way of explaining it is through a risk-based approach. So if you've got somebody that's like maybe like a local CIS contractor builder, and you're doing a PEP check when they come on board, the chance of them becoming politically exposed when you're doing their tax return, you see how they get paid, where they're getting paid from. The chance of them being a local councillor in that period is probably relatively low, and you likely will see that through other factors. But if you've got somebody that is in those sort of spheres, maybe isn't politically exposed directly just yet, you might find them to shorten that period to do it maybe annually or biannually, just to make sure you're aware of those changes, in addition to you seeing the transactions, having conversations with them. So it's really about one, your rationale, but also having a bit of a guide as to when it is appropriate to run those. But yeah, don't feel like you have to run it every year as default, because that's not the case at all.
I think that part you said there about risk-based approach is really interesting because I think people worry about that because it isn't kind of a clear cut, this is what you have to do. But I think the piece
Yeah,
you added on the end there is that actually, as long as you have some justification and you can almost write that down and say why you've made that decision, that is like the big part of it, right? Is that actually if
yeah,
you can justify why you've done it, why you're doing it that way, and that's written down in black and white in those policies and procedures, then that is kind of half the battle.
yeah, yeah, absolutely that. And there's various different approaches to it, but like I say, there's no reason to run those that regularly. The key thing really is the risk assessment side, because that's really going to drive one where the risks may be, but also the risk level and whether that is something you then want to shorten. So yeah, I think tying back to that little checklist part of that is just to review that process, look at the policies, and just knowing your clients just at a glance where those gaps might be, those sectors you might not have accounted for, and what other bits can I introduce that are uh, compliance advantageous as much as they are commercial at the same time.
Amazing. Well, thank you very much. A huge thank you to everyone for joining us.
Thanks, everyone.
Recording will be sent out. That will have links to both Teleroo and to Zama. So if you have any questions at all, please don't hesitate to reach out. We're always happy to have a chat and answer any questions offline as well. But have a fabulous rest of your day, everyone. Take care.
Thanks, everyone. Take care. Bye.